Live again. Another
Here we are.
edition of the Endeavour Exchange, where we're talking all the trends that are affecting your money. Thank you so much for joining us again on the live stream. And for anybody watching the recording, awesome as well. Thank you so much. Why don't we jump right into this today, Brent? There's a lot to unpack.
Full kind of plate here of different topics.
Well, we got a lot going on in the world today. So why don't we let's start unpacking it. So there's a recent study came out. KPMG had a survey they reported on. And it said 9 in 10 Canadians want a Canada First strategy to jumpstart the economy. As we're looking at like budgets, I know we're going to talk about that, and policies that are being created by the government today. 9 out of 10 people want a Canada First policy. What do you have to say about that?
Well, yeah, it was an interesting survey, and I think from it, there was some other information outside of the Canada First idea. I think most people get it that really our path to kind of getting out of this economic slump is broad vaccine distribution and making sure that people are protected and have what we need to go on with our daily lives and not worry that we're going to be harming our loved ones or spreading something around that's harming another's loved ones. So from that perspective, people got it. Like vaccinations should be the number one focus if we're looking at the economy.
Right.
But at the same time, as you mentioned, Canadians do want a Canada First kind of approach to how we deal with coming out of this economic downturn. Things like buy Canadian incentives, incentives for big companies to increase the amount of contracting that they're doing with Canadian-based companies, all these type of things, and just some interesting data points here. We actually have a chart on this, and I'll start with the top left of the chart. We'll see 92% of Canadians want a government to create incentives to buy Canadian to restart the economy. I know we talked a little bit about this with the tourism industry the last time we were on here. Incentives to maybe travel within Canada, tax incentives, things like that, to possibly reduce the cost for families and encourage them. Hey, stay at home here. We need your dollars here. 82%. This is in the bottom left corner. Want government to create incentives to get individuals and businesses to start spending their money. So again, we referenced the Eat Out kind of program that Europe implemented early in the pandemic.
Yeah.
But things like that where people are being encouraged to go out, spend local, get out, get to businesses, because obviously they are some of the most in need, the small and medium-sized businesses here in Canada. This one was interesting, and we'll be able to get into this in a little bit, but 87% of Canadians say we need less red tape and more incentives for entrepreneurs to grow their businesses. I
think that's huge. I mean, I think what I would like to see out of it is, a Canada First policy. I mean, I think it should always be Canada First, but the question is what's in Canada's best interest, right? And I would love to see strategy around helping Canadian companies to compete more on the global scale, and those types of things. So yeah, you're mentioning
and then to even further that, 89% say that they would support spending domestically to help getting the economy going. So Canadians want to get it and actually want to get things going. And actually, I found some interesting information from what's called the Frontier Center, which is an independent Canadian public policy think tank. Actually, interestingly enough, they were founded here in Winnipeg in 1997, but they had kind of 4 recommendations that governments need to be focused on as we move through to the pandemic. And the first one, doesn't actually even involve the federal government. It involves more cooperation among provincial governments. So things like opening interprovincial trade. There was a report from the IMF, and according to them, the removing of a lot of the trade barriers that we have from province to province, that they suggest that it could boost Canada's GDP by 4% per capita. So a pretty large number there. The second recommendation was a streamline in taxation. And through the pandemic, obviously, we've seen this rise in things like e-commerce and going online. I think there's a concern out there that the government might look to some of these businesses to kind of recoup some of the money that's been spent and go after a lot of the, implementing different sales taxes and things like that, where, these are very innovative industries. And one of the industries that I think not only Canada, but if you look across the world, when it comes to these type of businesses, countries that are excelling are really fostering growth in this innovation sector. And so the recommendation is to help continue that and maybe avoid kind of coming in and just hammering them with tax because they've been selling a lot of goods. We and I know we talked about this before, but we do Canada when it comes to developed nations, we do rank one of the lowest when it comes to foreign direct investment.
Yeah.
We haven't been that friendly to direct investment here in Canada from outside, and as well, we rank really low when it comes to streamlined taxes. So businesses right now spend approximately, on average, this is average, so some are spending over this, but 131 hours per year in planning and paying their taxes. That's a lot of, when you look at all the businesses across the country, that's a lot of hours being spent there.
I think and that's done nothing but go up this year.
Yeah.
I mean, with all the, you talk to any tax accountants right now, and these the COVID programs have just added to compliance, and so they're spending a lot of time, and it's costing a lot of money to businesses.
A more streamlined approach in the future. Obviously, what the pandemic has been a very challenging environment, and it's something that was unexpected. It's hard to kind of ridicule them, but I think there's some work that can be done on making things easier on the Canadian taxpayer to getting things done. Immigration, we have an aging and slow adapting population. We need to be, and we're seeing this, like I know, companies like Bold here in Winnipeg, we're seeing a lot of these tech workers being brought in from places like Brazil, Ukraine, all over the world. We're having people come in, but they're suggesting that this is something that should really be encouraged and fostered. And there was a study actually by Statistics Canada that found immigrant workers contribute enormously to the business productivity and the exchange of knowledge and ideas here in Canada. And so Canada, we cannot fill this gap of high-skilled workers and low productivity by itself. That's occurring because of that aging and unadapting population, and that targeted immigration is going to be a vital source for sustained economic growth. And the last one kind of comes back to, we talked about the sales tax with the e-commerce, but disruptive innovation. We need entrepreneurship. We need innovation. These are engines to creating wealth and increasing that GDP. And so, contrary to the kind of prevailing view out there that central planning from Ottawa has often in the past, multiple governments, so not just one government, but has been a little lazy and unimaginative when it comes to economic policies and things like that. So the think tank is just suggesting that we really need to focus on in this area of these innovative companies and helping foster that environment.
Yeah, I just think that my hope is that it's not lazy policy going forward as well, because it's really easy to say it's like we're going to support Canadian business and they're going to support like buying Canadian, but that doesn't actually help, in my opinion, help the Canadian economy compete on a global scale. Like, you might be actually adding in crutches to the economy and falsely propping it up short term, and eventually that becomes a problem, because if you're just funding it internally, then you're not competing again. So I would prefer to see policies around helping businesses to compete on the global scale, and that's how you help Canadian businesses, in my mind. And so and on top of it, then you start getting investment and trade with other countries, more trade going.
That immigration, being able to get some of those high skilled workers.
100%.
Well, with that, Grant, April 19th. The date is coming. We just heard the Liberal government will be unveiling a federal budget, the first in 2 years. Obviously, with the pandemic, things were sidelined last year, understandably. But my question for you is, what should Canadians be watching for in this upcoming federal budget?
Yeah, and so this is a really important budget, obviously. I'm glad that they're tabling one, because originally the plan was not to, and I get it. There's a lot of uncertainty still out there, but I'm glad that they're tabling one. I think it's important that people know how the money is being spent and what the plan is for the money to be spent, and so on and so forth. I think this is likely one of the most important budgets of our lifetimes, actually, given what's gone on in the world and the fact that how monumental the recovery continues to be and needs to be going forward. So I think this is a really important budget, to say the least. So I'm glad that they're putting one out there. I mean, you mentioned a lot of the KPMG survey that you were talking about, and it kind of pointed out what Canadians are looking for. Incentives to buy Canadian, wanting better support for healthcare, and helping more people who've been hurt more, probably more by the pandemic than others,
We
perhaps.
talked a
you
lot
know?
about we've been on here talking about the K-shaped recovery.
Right.
The pandemic hasn't been even across the board for
Yeah.
everyone.
Incentives to get people spending. There is a lot of cash on the sidelines. We know that. Like saving rates are higher, and largely part to government programs. Interest rates are extremely low, so there's cash there. They want to, or I would say that people want increased spending. We need to get that money flowing to other people and other businesses. Less red tape. You pointed out less red tape for business startups. I mean, there's no secret this has happened throughout history. Whenever there is a crisis, whether it's a financial crisis, any economic downturn leads to innovation. There are new businesses being created today that will be the Amazons, the Apples, the Googles, you name it, not just tech. You know, there's new businesses being created today that will be the darlings 20 years from now. I guarantee it. But we want to foster that in Canada as well. You know, we want to incentivize entrepreneurs to help get them off the ground and get those businesses going. So, I mean, again, that's coming from the survey. That's what people want. Want to address the inequities in the economy, the K-shaped recovery. Absolutely. Like, you know, we're fortunate. Financial services has actually done quite well during the pandemic.
Actually, there's significant data around like university education, jobs that require university education if you have an undergrad, and how you've been affected. A lot of people, their incomes have actually increased, and it's those without the education that have actually been the most affected, lost the most jobs, and you know, typically that's happening also to, you know, a demographic of people who don't have the same family income as well. So
sure, yeah. I mean, again, I think that the wealth gap has widened, and so I've said this kind of from day one, and this isn't a political statement by any stretch, but I would love to see policy that basically attacks that inequality in the economy, because there's certain businesses that are thriving and certain businesses are really struggling. And talked about tourism. You could talk about anything like food services, hotels, you name it, anything that's been impacted negatively by the pandemic, transportation. Like, you know, I would love to see that inequality addressed. I think the big one though is taxes. I mean, I think that's really the one that everybody should be watching out for. Everybody in the business world should be watching out for, because it's no secret, there's been a lot of money spent during the pandemic. And again, rightfully or wrongfully, we don't know. We won't know for 5 or 10 years after this is done. When we get a chance to evaluate everything that was done, then you'll know what the right thing to do was. But it doesn't matter really what that looks like today. The point is there's been a lot of money spent, and in a good way, because I think it's really helped and saved a lot of people.
I was going to say we needed to spend money.
Yeah.
I guess the debate comes around how much needed to be spent and
which we won't know. And again, that's not for debate today.
Yeah.
But the point is, a lot of money's been spent. I mean, when you look at the amount of money per capita that Canada spent versus the other G20 countries, we're the highest. You know, we've added more to our deficit than any other country has per capita. And that's okay. You know, it's fine. Again, we won't know the real answer for a long time. But that eventually does come back to roost. Like, we do need to start paying some bills, you know. And, you know, estimates are saying that our total deficit will be doubling by the time by 2025. So in just a few short years, we're going to double our deficit, basically. So what does that mean for taxes? Can
it mean anything?
Well, I think what it means is it's going up, and the question is, where is it going up? And so, you know, I think the things that are on the table are, you know, capital gains inclusion rates. So right now it's 50%. You're only paying on half of your capital gain. I think that was on the table in the last, a few years ago. I think it's definitely on the table. I don't think it left the table, frankly. So I think it's still there. We've had conversations with tax accountants here in the city. And you know, I've heard things like, I thought some of these were untouchable, but like, you know, taxation on principal residences, that's where their heads are thinking, is that they think that they might start taxing principal residences. Now, whether it's 100% of the principal residence, or maybe it's like if you've owned it longer than 7 years, then it's still tax exempt. I don't know. I mean, there's a lot of rules they could place around it, but something I thought that was off the table, they seem to think is on the table. Estate taxes, I think, are on the table. So, you know, the day the last of 2 spouses passes away, maybe there's a percentage that's attached to the estate values. Income tax is always on the table, especially on the wealthy, the highest earners. So Anyway, I think that one way or the other, I don't know what it looks like. Nobody does. I don't know if it's coming in this budget either. I don't know. I just think in the next few years we're going to see higher taxes because that's the way it has to go to pay off some of these bills. And again, that's not a political comment. I think it's just the reality of it.
Yeah.
So, but there's good news in that too. I think that the good news is, in most cases, you can plan around taxes. There's a lot of planning work that can be done. Once you know what you're looking at, then you just make adjustments in your plan. So again, this is the benefit that people with like corporations can have, through different if you're talking estate taxes like life insurance or you name it. There's a lot of different things that can be done once we know what we're looking at. It's just a matter of planning around it. So I don't know. I wouldn't. There's a lot of people freaking out about capital gains inclusion rates, and they're like triggering gains last year because they expect this is going to happen. It may never happen. You might have just triggered a bunch of gains that may never come to fruition, frankly. So I would be hesitant to start doing all this like activity around what you think is going to happen. I would just say, wait and see that you do the best planning work that you can today based on what we know, and then once we get a better picture of what's going on, then you can make adjustments and make some plans. Otherwise, you're just gambling. I mean, you're just kind of speculating. This is what's going to happen, so I'm going to do this. You might be completely wrong, and you just triggered a whole bunch of tax, right? So, I don't know. That's where we don't really know what's coming in the budget. That's the reality of it. But I think that's what we're likely seeing.
Needless to say, Canadians will be paying close attention.
I cannot it is the most important budget probably in our lifetimes to date because of the need for the economy to continue to recover in the next little while. And I think it will. I'm optimistic, but I think it's one that we should be paying attention to for sure. Okay, so we were just chatting about this. But right before we got on, I'm looking at pictures of huge cargo ships, like basically beached in the Suez Canal.
Is it Suez or
it's Suez Canal? Yeah. I want to talk. I know you're going to touch on it, but I want to talk a little bit about the supply chain mess, the global supply chain mess that's going on. This has been a bit of an issue through the pandemic as well, for a lot of reasons and a lot of things going on. But why is the global supply chain a mess right now?
Well, I think you said it. COVID. COVID. No, we're seeing it's a mess. There's a couple different things coming into play here. COVID is obviously one of them. We're seeing everything from cars, clothing, home siding, medical needle containers, computer chips, everything. You name it. The supply chain is having a hard time getting things to where they need to be. One of the other contributing factors was the Texas weather that had outages across the board in Texas. Port backlog. You're talking about one ship, but even prior to this, ports have been extremely backed up. We're talking, I believe there was a port in California that's responsible for about 1/3 of all U.S. imports.
Yeah.
It had 60 some odd ships anchored outside of the port with like 17 still unloading, and they're just waiting there. So these are all problems that are affecting manufacturers and have partially started because of the pandemic. You referenced the semiconductors and the chips. So we have companies like Toyota, Honda, and Samsung. PlayStation, yeah. You finally got your PlayStation.
Yeah. Months and months after.
Thank goodness, I was getting tired of having to hop online and wait online and get two people going.
I haven't owned a gaming system in like 10 years, and I'm so jacked about this PS5, but it took me like 6 months.
Yeah, well, it's the semiconductors because I referenced these automotives and Samsung. These are just the most recent multinationals that are weighing in on the challenges. They're halting production in North American plants. We're seeing it from GM, Ford, Nissan. With the outages in Texas, there was a shortage of petrochemicals, which go into different things for making plastics, and plastic not good. But when you look around and everything in the world today, the amount of plastic that we have.
Yeah.
Hard to get away from, and these port issues are really causing a mess. And now you got the canal issue with the ship. If you haven't seen the pictures, you should go online and see the. It's a massive, one of the largest ships, and it's stuck in this narrow canal, which is responsible for a large portion of the trade that occurs between Africa and Asia, which is massive, by the way. So,
and they've got like one loader trying to dig it out right now. Like, look at the pictures. It's like, I'm like, we need more equipment there.
I mean, I'm not an expert, but I'm looking at that going, you need
we need a
bigger shovel. But needless to say, the pandemic, the Texas power outages, these different, with the automakers and the semiconductors, what I think had happened during the pandemic is people just really didn't know what it looked like. So it was like shut down production, like slow things down because we're not going to be making these cars that aren't moving.
Right.
And then with the stimulus and the economy and how quickly it's come out of it and the spending that we've seen, they've had to all of a sudden ramp up the cars to meet the demand. But at the same time, during the pandemic, you had a lot of these technology companies, the manufacturers of things that you would use for working from home, computers, tablets, cameras. These are all requiring semiconductors as well. So there's this slowdown in the automotives, ramping down the production. All of a sudden, they're going, whoa, whoa, whoa! We actually need to ramp it up. At the same time, you had other companies who were kind of swooping in, and they were booming during that period.
Right.
So you're getting a little bit of a backlog. Now, the good thing is the market's likely going to sort this out. We are seeing some inflationary pressures because of it, but they might be a little more short term. The market will likely, as things continue to progress and vaccinations get out, the market will likely meet the demand. So.
Yeah, I mean, there's always money to be made, right? So, I mean, the bottlenecks eventually get solved because somebody's going to make more money fixing them, right? So,
exactly.
I agree. I think it gets solved. It is.
It's an interesting period of time.
Yeah, and it's this triple whammy of kind of events that have gone on, and but yeah, I'm with you. I mean, that ship's not going to stay in the beach. It's going to get moved, obviously, at some point.
We'll see. I don't know how soon.
Hopefully sooner than later. And weathers, those are not one-offs, but it's not a long-term thing. Once like
you said, it's a couple different events all at once that really created this whirlwind of a storm for the supply chains of the world. But this is an interesting topic. We saw a decision in France the other day as it relates to Apple and how they're tracking when you're on your phone. The advertising companies and the publishers, how they're able to use the data that Apple collects to kind of target you. In France, the regulators sided with Apple in reducing what they're going to be sharing. And my question to you is, we've seen it with the tracking, but we've also seen it with the Apple Store. Is Apple abusing its power?
Well, okay. We were chatting about this before, and I actually don't own any Apple products, but I am a fan of the company, and I mean, I think it's one of the best in the world. And so admittedly, I'm a little biased here, but look who's complaining about it. I mean, the marketing companies are complaining, because
Facebook.
Yeah, Facebook's complaining. Well, I wonder why. But as it relates to privacy, I think Apple's made decisions, and again, Apple's not a charity. Like, they're a business. They're trying to make more money all the time. But at the same time, they've made decisions to help protect people's privacy. And Apple has a track record now of making those types of decisions. They weren't releasing iPhone data to the U.S. government a number of years ago when the U.S. government was trying to get it. They've refused to do that. Now they're refusing, or they're basically saying they're going to slow down tracking or stop tracking, or they've even, like, in their apps, required the apps to, people have to acknowledge, they have to give permission to opt in versus the alternative, which was you had to opt out. So I think that Apple, as it relates to the privacy side of things, is doing what's in the best interest of their customers.
And I agree with you. I think it's what the consumers want. I think it's a tough argument to say, it's anti-competitive, when
I agree.
In reality, the people who are buying the iPhones go, no, I would prefer not to be tracked.
I don't think it's, and especially considering that, I mean, Apple, obviously they sell a lot of iPhones, but they're not the only game out there, And so anyway, I don't think it's anti-competitive. I don't think they're abusing their power as it relates to that. I mean, I guess the other one that's come up is, they had big battles going on with Fortnite and the makers of Epic Games.
They're in a lawsuit, right? Ongoing lawsuit right now.
And so they have a lot of power in their marketplace through the App Store. And so, they talk, about in-app purchases, things like that, and what they're charging. And I think we were talking earlier. So it was 30%. It was 30% still on above $1 million in revenue, and it's now dropped to 15%.
That's a very recent change that they made.
So are they abusing their power? I still don't think so. I think that, in my opinion, Apple's done this amazing job of creating probably the best, one of the best e-commerce platforms in the world through their app store and through their app marketplace. Hesitate to say the best because there's a lot of good ones, but it's one of the best marketplaces out there, and so they could charge a premium on that. I guess, is that abusing the power? I don't think so. I think that's the power they have, and in the fact that they've kind of scaled that back in the last little while. I think, again, that's the market and consumers driving that, because the consumers want those apps, and if those apps were not going to be listed on the app platform, then I think that's the consumers. I think that's the consumer speaking. So I think they've made adjustments. So in my opinion, no, they haven't abused their power. I think they've used their power. I don't think they've abused it.
Yeah, good point. This one's definitely a lot tougher for me. I think it would be tougher, or I think we'd have a different perspective if we were a young up-and-coming developer trying to, get an app up and running, and we're paying 30% to
maybe.
But
I think without Apple, you didn't have the platform to start your business, though.
It's hard to argue.
Yeah.
As you said, they are using their power. Whether or not they're abusing, it's a little more. I'm a little less certain there on if it's a yes or a no. But I see Apple's point. They've argued that things like security and data, like there's a lot of money that goes into ensuring that the app store is a safe place for people to purchase and transact and download apps. There's a lot of money that's gone into making that safe. And at the same time, there's a large portion of these apps on there that are free apps to begin with that they don't really collect upon.
Yeah.
Now, I think without Epic Games, a lot of these Spotify is another one who bringing these kind of issues around that app store into the focus. I don't know if we necessarily would have seen the recent changes. So.
No, probably not. And hey, that's a good point, because I think that there's valuable apps or valuable businesses that are going to keep Apple in check on this. Epic Games is one of them, and I think there's going to be more that keep Apple in check. But until that point, I don't know. I just don't think it was Apple's responsibility to say, hey, we're going to just drop our prices, because the market dictated the prices. They were willing to pay it before to get on the platform. If they didn't want to be on Apple's platform, they could have gone somewhere else. But guess what? They probably made more money by being on Apple's platform in the first place.
Coming back to the tracking and the ad portion, what's interesting is, so although France did decide alongside Apple in respect to that, it wasn't an abuse of power to change the rules as it relates to tracking of data.
Mm-hmm.
And they did say they're going to be paying very close attention and investigating whether or not they're holding themselves to the same standard.
So I'll retract all my statements if it's determined that Apple is giving themselves preferential treatment on that, and then I would say that's an abuse.
Yeah.
but if they're not, if it's an equal playing field, then I don't think there's been any abusive behavior there. But yeah, I mean, if certainly Apple's giving themselves an unfair advantage, I mean, again, it's because they've created the platform, they own the platform, they own all the devices are all iPhones.
Yeah.
Okay, that I would give that one back to you, but until that's determined, I feel Apple has not abused their power. I think they've just used their very powerful marketplace that they created, and I don't know, that's the benefit of creating a marketplace. Those apps would not be the world would be a lot different today if Apple didn't create, if iPhones didn't come out back in 2010 and the App Store didn't. I mean,
still on BBM, BlackBerry.
BlackBerry would be massive probably, but I think the world would be a very different place today if Steve Jobs and Apple didn't create the iPhone way back then.
I can live with that.
Okay, we talked a lot about the pandemic today, as that's dominated headlines obviously for a long time now. The pandemic created this upside down market, because economy was going in the opposite directions of where the stock market was going. I mean, it was in line for about 3 weeks in March of last year, and then there was complete diversion.
Yeah.
So, and we're seeing that. We thought we were seeing a correction, a correction in that, I guess I would say. But what's going on with the upside down market today?
Well, as you mentioned, last year, stock market was. I remember everyone being so confused last year. Stock market was rising. We were still, COVID cases were ticking upwards, and the economy. We were hearing about all these businesses. The actual kind of Main Street economy was getting worse. Yet the stock market continued to post one of its best years.
Yeah.
And then this year, economy. We're getting news that economy's doing fairly good. Vaccinations are starting to happen. We're looking like we can see the light at the end of the
Right.
tunnel. And now the stock market's pulling back a little bit. So
Yeah.
again, leaving people a little confused. But through the pandemic, what we have to remember here is the Fed threw everything into it. With reduction of interest rates down to zero, significant asset purchases in QE, like they did not wait.
As did most
Central banks around the world. Yeah. They came in and they acted quick and they acted fast. They weren't going to kind of sit around like back in 2008, and they knew that they needed to act. And we have a chart here. U.S. government debt as a percentage of GDP has broken the World War II record. It's above 125% now. So that we'll see. And I think what we're seeing from the markets now is that we're having the markets are having somewhat of a disagreement with the Federal Reserve Chair Jerome Powell, who is focused on keeping monetary policy, and he has said this recently that it's going to stay loose until they see full employment and until they kind of hit those inflation targets. And they've even mentioned that in the short term, they're willing to run those that typical 2% inflation target. They're willing to run a little hot on that.
Yeah.
And so I think markets are looking at the economy right now and going, we have loose policy. There's just a whole whack of money out there. Economy's performing better than expected. And so now what we're seeing, we have a second chart here, and we're looking at interest rates are rising along with inflation. Not the short-term rates, but we're seeing those longer-term rates rise with inflation on the expectation that there's going to be inflation, that there's going to be growth. And we're now at the highest point in 2008. The chart we're showing here is actually the break-even inflation rate, which is a measure of expected inflation, one of the more followed measures. And essentially the difference, we won't get into too much of the technicalities, but it's the difference between the yield on a nominal bond and an inflation-linked bond, like TIPS. So it's at its highest level, which ultimately means, bottom line, that markets are expecting inflation is going to be possibly higher in likely the 3% range down the road. And so markets are reacting to that. When it comes to rising interest rates, if we look at history, stocks have actually done all right in rising rate environments. But they've done below average, and this is normal and makes sense. But in those inflationary rising environments, that's when we see the markets not perform so well. So with that, inflation expectations aren't the end all be all. We talked about it in 2000. Everyone talked about it in 2008 that there's going to be inflation.
Inflation's been coming for a long time, according to what most people were saying.
Still not there. So who's right here, Powell or the markets? I don't really know. But if you're wondering, why we're getting news that economies are doing well, yet now markets are pulling back, I think we got a couple things going on here. Markets did rise when the economy was doing poorly, so maybe a little bit of that is a healthy kind of come back down to the reality. And at the same time, I think the inflation expectations are causing some jitters as well that we're going to run a little hot. So,
well, I think you got to look at what took the market higher last year too. I mean, if you look at the S&P 500, a large part of it, I don't know exactly the component of it, but a huge percentage of the actual increase you saw came from like 5 companies, right?
Yeah.
The big techs.
Yeah.
So if it wasn't for those companies, probably was a very average, well, not even average, probably a very mediocre year on the S&P 500, right? As we kind of saw in Canada a little bit too, like there was it was driven by a select few companies that just happened to be huge companies.
We're able to pull the whole market. You read the S&P 500's up. Really, it was the
it was Apple, it was Amazon, it was so it was big tech that really drove it, and then you saw companies like Tesla and Zoom and all those things like Peloton, like those companies, like it was the pandemic companies that really took it higher. And so on the other side of that, I mean, again, is like as we're coming out of the pandemic, is there a reason to not like those companies as much? I mean, some of them for sure. And so, those companies are pulling back to earth. Now, again, I think if you're an investor in a good quality company like Apple, you might necessarily not want to buy more of it today. But I don't necessarily mean that. I don't think that means you should be selling it.
Yeah.
Like if you're a long-term investor, you think Apple is going to be great for the next 20 years. Why would you sell it today?
If anything, there may even be some opportunities that come from this in some really quality names. If the markets continue to get spooked. What's interesting is, again, we're talking about the market, but the market is a number of companies.
Yeah.
We've actually seen, in the energy sector, in the financial sector, in the values, a lot of these more cyclical names, as the economy as we're seeing the light at the end of the tunnel, a lot of those beaten down names have actually performed well this year.
Totally.
But again, to your point, we have a large number of these tech companies which are selling off in this environment, causing this market number to...
I think it's a good point. You just got to... Everybody watches what they post in the news. They post the Dow, which I think is a really unfair assessment of how the U.S. economy is. It's the 30 companies, mostly industrial. You've got the NASDAQ, which they report on, which is mostly technology, and then the S&P 500, which is probably the best gauge. But as we pointed out, I mean, there's 5 or 6 companies at the top of it, which make up more than half of the the S&P 500 valuation, essentially. So is it really? I just think you have to be careful. I mean, it's indicative, but you have to be careful about just benchmarking against just what they show on the news, those indices. Because it's not giving you the full picture, as we found out last year, probably now more than ever, just because of the size of certain companies. So you got to be a little careful about that. But I mean, it is a really interesting time, though, to say the least. I think that that dichotomy between the economy and the market, I don't remember ever seeing that before. And
so opposite at 2 different times, like a complete reversal. So
and it was clear that the market was looking. I mean, they say, or what I've read, that like the market essentially, which nobody actually knows this, but they were saying that it was looking ahead to about July and August of this year when it was seeing those big increases last year. I don't know, like how you measure that. I think that's whatever, but it was clearly looking ahead of the pandemic. It was assuming there was going to be vaccinations. It was assuming, so all this stuff, like even if we have good news on vaccinations, it's almost like that's priced in, and so that's not moving the needle anymore. I could say, though, like a few bad days on the vaccination front would probably move the needle quite a bit lower.
Some supply chain issues.
Yeah. Like how many vaccines were on that boat?
I don't know.
Hopefully not a lot.
Yeah. If there is some, we got to get more shovels and get digging.
But I mean, I think it's something that, eventually these things iron themselves out. I mean, the market is not, the market and the economy are not perfectly correlated, as we know. They never are, but eventually those things too tend to trend in the same direction, right? And so as the economy continues to improve, there's a lot to like about the market, and I would definitely treat it like a buying opportunity. If there's good companies, quality businesses out there, especially that you can pick up on a steal of a deal as it's come down in pricing, like we've seen in the last month and a bit, then maybe it's a good time to buy in. But I'd be very careful, because some of those companies are still trading quite highly. Like we've had a pullback, but nothing too significant.
Nonetheless, optimistic about the future, I'd say.
Yeah.
Despite what's going on now, where we're seeing some of the choppier red days, if you're a long-term investor, if you've built a proper portfolio, diversified portfolio, and you have, protections in place for things like inflation, you're going to be fine. Things will be fine. There's lots to be optimistic about when we look at a lot of the businesses, both in Canada, the United States, abroad. Over in China, Southeastern Asia, there's a lot of businesses doing some really cool things that are in my mind, inevitably going to create wealth and value around the world. So,
yeah, I mean, despite what the news will tell you, I think that the brightest days are still ahead of all of us here. So,
great. Well,
that's a good place to end.
Yeah, that worked out. So, appreciate everyone tuning in to today's live stream. Thank you again, Grant. Always a pleasure to kind of go back and forth here. Check us out. You can visit us at www.endeavourwealth.ca. Our contact information can be found there. If you have any questions, any topics that you'd like us to cover, have any interest in, we're always willing to field some of those. You can check us out on Facebook as well, YouTube, LinkedIn. We would love for you to kind of join us and follow us along in this journey of bringing you all the trends affecting your money on the Endeavour Exchange. So,
thanks very much.